Hi, and welcome to Talk ETFs, our weekly video series. I'm Sumit Roy, Senior Analyst for ETF.com. Today, we're talking emerging markets with a focus on the internet and technology sectors. It's been rough for emerging markets over the past several years, but these countries and these economies still hold a ton of promise. We're talking about massive markets with billions and billions of people. So is it finally the time to invest in emerging markets? Kevin Carter, the founder of EMQQ Global, is going to help us answer that question. Kevin, welcome to the show.
Thanks for having me.
Kevin, your flagship ETF, EMQQ, had a rough 2022, along with a lot of other tech and growth-focused funds. This year, it's doing a little bit better. Tell us why people should consider investing in the internet and e-commerce sector within emerging markets today.
First of all, let me point out we did really bad in 2022, and we did really bad the year before. So, both of those years were negative 30% years. So if you look at a chart, you'll see a significant correction or crash even in the prices. But ultimately the story remains incredibly compelling, the story of EMQQ. And it's basically, there are three mega trends happening on the planet at the same time. The first is that there are 6.5 billion people in emerging markets, 85% of the world's population. They're younger than we are. They're about 90% of the people under the age of 30. And they are emerging. The people in emerging markets are what's emerging, and they want stuff. They want more and better food, more and better clothing. They want appliances. They want to take vacations, and they want their kids to go to college. And that's the story. I didn't have to figure that out, by the way. And I got involved with China 17 years ago. That was already well documented. And McKinsey calls that the biggest growth opportunity in the history of capitalism. And so that is the big deal in emerging markets. Unfortunately, investors in emerging markets over the last 15 years haven't really made any money because the indexes, the broad indexes, are full of the legacy economy and the state-owned enterprises, the frequently corrupt banks and oil companies and so forth. So people, a lot of people have not had a good experience with the emerging markets, but that consumption story remains a giant driver of global growth. And what's happening now is that mega trend is intersecting with two other mega trends that we've been part of for a long time, but we forget their trends because we've had them for decades now. The first mega trend beyond the consumer in emerging markets is the computer. We've had computers for 30 plus years, well before we had smartphones, but the world is getting their first computer basically today, and it's not a desktop, and it never will be. It's a $60 or $80 brand new Android-based smartphone, and it's bringing with it something that I've had since 1995 called the internet, which I first got on a telephone line with a modem in San Francisco, where you are, but most of the world never got wired. So when these people are getting that first supercomputer basically in their pocket, they're also getting online. And because they don't have bank accounts and they don't have Target stores and they don't have credit cards or automobiles, they're leapfrogging what we think of as traditional consumption, and in many ways are more digital than we are. And so it's the emerging markets internet sector that's not just the fastest growing part of emerging markets, but it may be the fastest growing sector in the world, and perhaps even ever. I mean, there's been an incredible amount of growth in the emerging markets internet companies.
Given that EMQQ is very China focused, are you concerned about the geopolitics surrounding China? And are you worried about the regulatory crackdown on the internet industry that we've seen in China over the past few years?
Well, look, I mean, the China story is a long story, and we could fill many podcasts talking about China. And yes, China is the biggest emerging market in the world, and it's also the biggest e-commerce market. I mean, China might be an emerging market in a traditional sense, but when it comes to smartphones and e-commerce and all things digital, China is the most developed country on the planet. So China is an important part of the world's economy. The geopolitical situation has been terrible. I've been involved with China for 17 years. And, pretty much from the beginning, the one thing that has been consistent is, over 90% of the people I've talked to have never been to China. They don't have any sort of feel for what it's really like on the ground. And because the headlines are always so decidedly negative, people are afraid. And they think that, the Chinese government's evil and trying to steal all their money. I don't think that's the case. I think the Chinese people and the Chinese government have benefited more from capitalism than anybody else on the planet in the last 30 years. So in terms of the so-called crackdown, I didn't have any problem with any of the regulatory actions taken in the so-called crackdown. And by the way, you can look at the newspaper every week and see the FANG CEOs in Washington, D.C. or paying, billion-dollar fines in Europe. So regulating, major sectors of the economy is not, unique to China, but that's largely over.
Can you talk a little bit about India specifically? A lot of people are really excited about investing in that country, but what's your take? The biggest concern I hear from investors about India is that the stock market over there is overvalued. Do you agree?
Here's what I would say. One of the problems with all emerging markets, and this applies to the iShares and Vanguard broad emerging market products, and also the single country, China or other emerging market ETFs and indexes. The problem is the indexes are horrible. I mean, there's no easy way to put it. And the first problem is there's a lot of these government-owned banks and oil companies, state-owned enterprises in emerging markets that they're not there to grow earnings and grow value in a traditional sense. And they have conflicts of interest. Poor corporate governance would be putting it mildly. I mean, you have presidents and government leaders all over the country that are wanted for, stealing billions of dollars from the state-owned enterprises. So that's the first problem. But the second problem is the internet companies are largely missing from the index. So, if you look at the 125 companies that we own, which, are all of the public emerging markets internet companies, less than half of them are actually in the index. And so, so when people talk about, how is India doing? Everyone references the index, and that's a big problem. I don't think in most of these places, I'm quite confident the index, the traditional index, is not the best way to go. Now, in reference to the current valuations, I do know when people cite the current PE multiples for the Indian index, whatever however its composition, yes, it is on a PE basis one of, if not the most expensive of the emerging markets. But having said that, I think there might be a reason for it to be expensive. I mean, look, it looks great. It's going well. They're largely outside of the geopolitical issues that you talked about. So, you pay a high price for a cheery consensus, and you get your best values when things don't look so good. And, India looks really good and China looks really bad. And so I think both places are going to do just fine when it comes to their internet companies and the digital growth that's going to continue to happen. And I think investors should own both. But if you don't, we have three different flavors of what we do. So if you want to just buy India, we also have the INQQ strategy. And if you want to leave out China, you can buy FMQQ. And if you want to just own it all, including China, you buy EMQQ. But either way, this is happening. You've got billions of people becoming consumers, getting their first computer. It's a smartphone. It's happening right now. And they are leapfrogging past the bank accounts and the credit cards, the debit cards, and the car ownership and the big box retail. And that is going to happen for a long time.
Kevin, it's been an absolute pleasure having you on the show. Thanks for your time.
Thanks again.